Hello, hi there guys, how are you guys doing? Let me just adjust my camera a little bit. Okay. All right, how are you guys doing? All good? Sorry, I'm a bit late, I think 6 minutes late. Okay, let's start. It's already on recording. How are you guys doing? All good? Just to check, you guys can hear me loud and clear and see my screen. Is that correct? All good? Let me check. Okay, all good, brilliant. Thank you very much. Okay, so we can start. We have got a few things to discuss, but mainly with one of the top movers are the Euro Crosses, especially Euro-USD. We will apply what we have learned because today is the third part of the psychological numbers, but we are going to apply with what has moved the market the most today, which was the announcement of the 600 billion program for the COVID by the European Union. So, so they basically question the amount, whether or not they're able to pump in the 600 billion, or is it less than 600 billion, or even if they pump in 600 billion now, will it be enough? This is the most important thing. So there has been a lot of doubt in the market, especially by investors, traders as well, and experts, analysts, and they have actually come up with the conclusion that it is not going to be enough because of a lot of mess that has been caused not only by the COVID, but all the geopolitical mess and the trade deal and the situation in terms of trade tensions and relationship between China and the US. All that has actually been, very, very complicated, very complex, and all these new things have actually emerged as well with the coronavirus surprise figure, very, very big number in Texas especially. And they initially found out about the growth of the or the rising of the COVID in Texas since last week, but they kept it and not actually leak the information, but somehow it got leaked, and then they have to announce it. But then when they announce it, by the time they have announced it, the number have actually increased even more. So that is going to be very, very difficult for the market to absorb that. And so the market has actually gone to the upside as well for the dollar, mainly because it's a safe haven as well. We've got oil prices as well, dropping, and the demand is actually going down for the oil. We've also got things to discuss about the technical levels for gold as well here, because it is rising because of it being a safe haven as well. And this is going to be giving us some opportunities to trade. But before we go anywhere else, it's probably best for us to just discuss Euro-USD first, because Euro-USD has been quite interesting on the sell. It has dropped a lot. And on the technical side of it, a lot of people, a lot of experts, or I would say some other strategists, they seem to be looking at the head and shoulder pattern as well. So that is a pattern that will drop the Euro-USD much more. But what I'm looking at is this area here, which is a reasonable support area because it is supported by other levels of support. So if we have this area right here, that is the 1175, 1180 area, which basically may have been an area of support in the past. So if we go to the left, of course, you will see that either it was a significant resistance that have turned into support, or a support that have continued the trend. So you can see you've got a lot of resistance there. So resistance could become support as well, and we've got some more resistance in this area here. Now this area here, let me just clear out all these lines. Give me a second. So let's focus on Euro-USD a little bit, mainly because we will have quite a big number of trading opportunities. I would say ample of trading opportunities on Euro Crosses. So Euro-USD is one of the highest traded currency as well, and it will be giving us a lot of trading opportunities. Now here with the Euro-USD, there is an area around here. Let me just put, there is an area where you have got a bit of a sideways market. So I'm putting it in the box. Now the price now is at 1.1204, which is very close to the 1200 psychological number. Also very close to the upside on the 1.1220 area. Okay, so that is basically where we see that the current price is respecting that area right there, but it is also a resistance area because there's just too many candles going sideways, but they all stuck at the top and then before it dropped down. So we have got this area here. If you want to draw a trend line as well, you can, and you can see that it has steadily gone down, and it has gone down a lot from that level, but the current price is actually at in the middle range of that level. So if I were to have a horizontal line on the highest point right there, also on this level here, let's just put it this way. Okay, let's say it's around there. I can pull this one down a little bit. Yeah, this is probably better. Now we have got that spike upward there, of course, but then if you look at this area here, all this area here are, it's really important to look at sideways candle movement like this, especially if it's at the top and then it causes price to fall a lot. I mean, from that boxed area there, let's say from the high point there, it dropped down, I would say about 350, about 307, 360 plus pips right there. So that drop was quite a significant drop. So we need to look at this area as well, and we can see that, you know, it has definitely caused a lot of drop of price from the breakout there, and now the price is literally in that same box, okay, in that same area where I have drawn the red line between 1.1228 to 1.1178. So what I'm waiting for is, if it does actually drop much more, maybe drop just a little bit more by 20 pips or 30 pips, then it will break out from these two red lines. If it does break out, then it may give us more selling opportunities. So what I'm waiting for is not what is happening now, what may actually happen. And if it does actually break out from this red line, or let me just close that and go back here. So I've got these red lines here, and you can actually see you've got loads of movement, very volatile movement at the very top. So there may be a possibility of big momentum dropping, and now we are seeing the fundamental factor acting like fuel to actually push the price or pull the price down even more. Okay, so we do have a chance or an opportunity to actually sell the euro much more, euro versus dollar, euro versus JPY, euro versus many other currencies as well. But now we want to really look into the Euro-USD because it's got a lot of liquidity into Euro-USD, especially if we have got a big fundamental geopolitical happening, like what has actually happened with the ECB meeting today. Now, if we have it like that, and then I would like to trade the Euro-USD because of the liquidity level. But if we don't actually have very big news or something that is really significant, then I wouldn't actually look into Euro-USD, even though it's a major pair, because I need Euro-USD to be influenced by something big, like an event, a data release or something that pushes it. Then I would actually trade the Euro-USD because then you will find a big opportunity to trade Euro-USD. The good thing about Euro-USD is that it's you can trade it for a long run. That means you can trade it with loads and loads of pips if you have got fundamental mixed with technical. If it is just technical alone with no fundamental data, then it is a little bit risky, okay, because you might be floating. If you float, you may float for a reasonably long time. But if you ride the trend and there is a trend, then Euro USD is quite a good one to actually trade, because of the risk level as well, because the liquidity is very high. It's traded the most. So you've got Euro USD giving us opportunity for now. So what I'm looking at is the potential for it to break out, but don't wait till it just breaks out. If it comes back to that point and then make the way down, that would be better to actually attack the market and sell from here, not from here, okay, because this is more a risky one. But of course it does depend on your equity level as well. If your equity level can come down here and then basically how you call that, sustain the losses and then go up. Because my worry is, what if it doesn't go up here and bounce down? What if it bounce upwards instead? Because that can also happen. What if there is something here and pushes the price upwards? Then that's where we get into a floating scenario. And the number one problem is because traders, they aim a little bit too high sometimes. So if you aim like downwards 100 pips, 200 pips and all that, which is very possible, but it doesn't come down straight line. It may come down zigzag, maybe a correction upwards as well. So we don't really know. So that is why sometimes if you take it in stages, 30 to 50 pips per time and all that, then you understand where the location of your trading opportunity is. Then you have got a better chance to actually lower your risk. Okay, so here, this is basically it for Euro USD. So I'm looking at the 1.1170. Okay, so 1.117, 1.1170. Okay, this is the 1.1170 as a potential selling area. It's just that I just want to be very, very careful with all this support area here, support area here. Sometimes it may trigger the support or the buy, even though after coming down here and then it shoots up, then a lot of traders will think that it might just come down and always will go up and bounce down. No, it might do anything. It could actually do anything. It could actually even be driven to the upside. So there's just no guarantee. We don't want to guess the market as well. We just want to let the market do what it could potentially do, whether it is to make you happy, to smile, or make you not very happy. It doesn't actually really matter. You just need to be prepared in both scenarios, and you know that the risk level that you want in both scenarios. Okay, so that's why part 3 has got to do with attaching some fundamental factor, because a lot of people, a lot of traders would actually ask me as well, if you're applying the psychological numbers, which are price action or anything that you apply in the market, will it get influenced by the risk in the market caused by data, an event, let's say a speech by the ECB President and all other things, or news, for example. Now, the answer to that is that yes, it gets impacted, it gets influenced, but sometimes it can go against. It doesn't actually break the strategy. What it does is that you need to be prepared. You need to have your strategy, whatever approach, to actually be prepared in both scenarios, and never have only one scenario in your brain, in your mind. If you only have one scenario, for example, geometric patterns is going to happen like this. This is a bearish pattern, so the price will fall at the D point. When you use the words like will fall and all that in forex market, that is where you can get very disappointed and then demotivated, and then you try to go into revenge trading as well to repair all the mistakes. So in order for us to prevent that kind of mentality, that kind of psychology, what we can then do is we can always prepare for the market, meaning always expect that it can go both ways, either to your way for the TP or against your way for the SL. So then you need to be prepared on the SL level as well. Okay, so for example, if you are looking at a TP of 100 pips, which is just a potential. Doesn't matter whether the technique is fantastic or whatever. Let's say for me, I draw the pattern, I trade only my geometric pattern, for example. I have my way of doing my trading, and I'm teaching you guys on how I'm doing it. But then I never actually think that it will always hit the TP. For every trade, I must think that it can or it cannot. Okay, it may or it may not. This is my trading mentality has actually been for many years. Okay, so I never get disappointed when it hits the SL, because it must be in your mindset that you expect that SL, and you need to expect that SL with the amount or the number or the level of loss pips according to yourself. Okay, so if you are trading and then you're aiming a TP of 100 pips, don't get overly excited and only concentrate and focus on that idea. You need to treat Forex like a coin. It's got two sides. And if you think about 100 pips, you need to ask yourself another question. Are you willing to lose 100 pips? This is the most important thing. That is why I prefer to trade in stages, which actually means that if I've got a pattern, let's say, and the pattern is a one way of looking at pattern. Give me a second. So where do I, there you go. So if for example, I'm looking at format, make it a bit thicker. Great. So if I'm looking at just pattern and I see that, oh, I've got an A to B here, B to C, and then C to D. Oh, wow, I have got a lot of potential here for the drop. Who guarantees you that drop? There is no guarantee. So when I draw, let's say for myself as a trader, when I draw a pattern and I see, okay, I checklist and everything, even though there's just so many reasons to tell me that I've got a high probability for the pattern, I still need to know, and I still need to know what to do if, for example, it breaks out here, doesn't reach here, somewhere in the middle, it goes up, and then it shoots up tremendously. What do I do, and when do I do what? This is the most important thing. Okay, so you've got your stop loss. Do you actually hit your stop, make it just hit your stop loss, or you would actually get out earlier than the stop loss once it reverses? Once it reverses, by how much? This is also very important. So we are going to go into more risk management, troubleshooting type webinars from next week onwards. Okay, because I want to really drill down into a lot of traders will think that they are quite boring subject in terms of knowing what to do when you are in trouble. Because what to do when you are in trouble, if you are trouble focused in Forex trading, or it means that you are risk focused. If you are risk focused, then you are a business continuity type person. Okay, because Forex is all about business as well. It is exactly like running your own business. And you need to understand that we are impacted by so many things that can actually just sabotage our TP. Okay, so we've got a TP ready in our mind, and we play it in our mind. Sometimes we play it in our sleep and thinking that we wake up and we want to see it hit and we want to smile about it. The thing about Forex is that it's very different. You need to think of two scenarios. I've never made very positive picture in my mind of TPs. I always want to think about what I do if it hits the SL. And that is basically how we actually survive in Forex trading with consistency. So this is basically not what you guys want to hear, of course, but this is the reality of the market, whereby we need to think about what if it hits SL. Okay, and so we know what to do and how much are we willing to risk now, because all you need to understand is that you need to preserve your capital so that you can actually go along and ride another trend to cover up your previous loss. If you have not used your money properly and you sort of finish up more than 50% of your equity just because you are riding that trend and you are, you know, revenging the market and you want to grab what you have lost or make up what you've lost, then what happens is that when the time really comes with a great opportunity and the setup is higher in probability and the risk is lower and there's a lot of liquidity and there's a lot of momentum, you may not be able to benefit from the market fully. So that is why you need to always have enough, preserve your capital and cut your losses early. Of course, if you cut your losses early, you're preserving your capital. Okay, so now this is what I would like to talk about today as well, because it's part 3. We want to look into the fundamental factor today. Okay, so we have got news factor today with the Euro-USD, and I want to talk about Euro-USD in connection with the price action, with support resistance, and also your psychological numbers especially. Okay, so this is part 3 of 3. Okay, so now, for example, what I'm waiting for, as I've mentioned earlier on, is to look into 1.1170 as a potential area to actually sell. Now, remember that I always want to drum into you guys to understand that we want to look to the left to find out whether or not, once it has broken out of 1178 and go below, have we looked to the left to find a bearish single mother candle. This is one of the best, simplest technique to understand whether or not the location of where you are thinking to sell has got the power from previous sellers, because previous sellers and big boys and all that, they like to plot certain location, okay, to get loads of momentum, and that is where they've created the momentum actually. So a single bearish or bullish candle can give us a lot of hint that there may be a possibility. So that was what went on with the drop. The drop, as you can see, remember we talked about Euro-USD as well previously, whereby we did look to the left at the time when price was still up there somewhere, and it did tell us that it's got a lot of potential because of single bearish candle, okay, at the time. But it didn't actually drop with single bearish candle, but it's got loads of momentum and it fell quite a lot already with Euro-USD. That's the reason why, because sellers or buyers, they like to mirror the location. It's like you going to an area to buy your favorite type of food. So people have it in their mind that that location is good for fried rice. That location is good for something else. That is good for something else. So it's the same with selling and buying. They know, and they all have flocked with mass psychology at certain area, and that has been reflected by bearish, single bearish or very bullish candle. It can actually be even smaller half-sized candles, but then going a lot like 3, 4, 5 candles down, or 4, 5 candles up. So here, for example, you've got a location here, so, and there's no minimum whether it has to be a length of 50 pips, 100 pips. No, it's just the way it actually falls and the way it continues that trend further. This is what's most important. Now we've got that one here, for example. It's an area where we've got a bit of a spike, but it didn't really continue the trend so much after that. So that is more an area where it was a sudden sort of spike for some reason, but it was not a genuine trend to the upside. Okay, so now, for example, we want to see to the left whether or not upon breaking out, upon Euro-USD breaking out here, can we sell more? Has there been lots of selling pressure? So if I go like that, I want to go around this area here, and I want to explore. I want to explore and see whether or not it has. So it's got one here, okay? Got a bearish candle here, which has broken out from the red line area. There's one here that was back in, oops, second. Not sure how I can hide this. Give me a second. Okay, so if I were to look into that candle there, you can see a bearish, single bearish mother candle, and that happened in March this year. Okay, so we've got one there. So let me just look into all these candles. Maybe if we go to the left, we'll find even longer one. So the longer single bearish pattern, the better. Okay, so we've got one there. Now, what is the size of that? What is the size in terms of pips on that whole mother candle there? It's about, this is based on, it's about 92 pips, and it's based on the 4-hour chart. So I just want to explore, and I want to see how many candles from, but that red line needs to touch that candle a little bit so that we know that it started from there. This one here didn't really start, didn't really touch that red line, because I want to look at bearish candle that has broken out. A single bearish mother candle has broken out from that red line, and I want to look at how many. If we've got many, then your chances or your opportunity for selling will be much, much higher as well, because these are the locations where loads of momentum of selling have happened. This is what we want. So if we go on to the left, we've got another one here, but this one didn't come down too long, but this one here is quite long from the rate point there. So I just want to do that as well. Just want to mark it. Okay. That one there, I would guess it's probably about the same 80, 90 pips, I would guess, but we can always make sure. No, that was shorter. Sorry about that. That's still on a 4-hour chart. That's only about 30 pips or so, 28, 29 pips. It's okay. We can go further down. You see, we can see longer candle further down, and that also gives us a hint that maybe the momentum, maybe it will trick the market, and then thinking that it will go down, but then it will correct from above here. You know, we never know. So I just want to make sure that I'm looking at the right picture. More selling pressure. We have one that is very close. We've got one there. Let me just take a look again more. I like to take my time as well. I don't like to rush, because there's just no point. If you rush and then you want to do things like really fast, what would then happen is that you might actually make a decision, but not really a high probability decision, and then you get confused. Maybe you make mistakes as well, because you don't need to worry about chasing the market, because there's always opportunity. You find the right location, you'll get the opportunities anyway. Okay, so it doesn't really make any difference whether you trade now or you trade later. It's your individual choice, so it's no problem. So you've just got loads of opportunities. So here, for example, we have got one really a really strong area, and I want to talk to you about this. You see here, for example, we've got market came up with a single bullish candle first. You guys can see this, right? And then it just drove the market down by a single bearish candle. You see that one there? So this is very strong. This is an area that we need to respect, this area. And the current price now is exactly on these two bullish and bearish mother candles, but we are paying more attention to the bearishness and the bearish mother candle, because it has driven price really low after it broken out there. So upon the point of breakout, let's say if I would like to enter at 1170, let's say, yeah. Oops, sorry. 1.1170. That's just there. Okay. Now from 1.1170 right down to the end of the candle there, okay, the closing basically of that candle, it's already 120 pips. So 119, 120 pips, and that's really good. So if I were to take profit, I would have to take profit. Let's just check what it is first. It is actually bang on the no, wait a second, 1.1050 psychological number, so I cannot take profit there. So I would need to take profit 10 pips before, 10 pips above the 50, which is 60, right? So I would then mark that one there, 1.1060. Okay, that's my TP. Okay, So 1.1060. So you see, we are just making decisions without patterns, without anything else. Patterns and all that comes later on. We can add on the pattern actually onto price action, but price action, psychological levels, looking right, looking left, are your first priorities, not the pattern. Okay, so a lot of people, they go straight to the pattern, straight to the strategy. No, it is probably best to go towards the trend first, of course, so you can pick the right pair, and then you go on to price action, support, resistance, looking right, looking left, doing all the lines based on psychological numbers. Then you have all the other techniques, pattern, whether it's Elliott wave, you got geometric patterns, or anything you want. You add it on and see whether or not it sharpens your analysis, and then you pick the right price of entry by tweaking the price, adjusting the price using psychological numbers. So now from 1.1170 selling at 1.11, you can do a pending order. Okay, 1.1170 right here. Okay, so there you go. You've got one there. Pull it all the way down here to 1.11, 1.1060 roughly. Yeah, that's already 100 pips at least. Okay, so this is good. This is a good area right there, because it's a bit too early now, even though it's on the candle, but then we are too close to 1.1220 psychological number and 1.1200 psychological number. So I feel it's better to wait till the price comes down, not comes down too low, but then come lower than certain areas. And this is a very, very good indication right here by two candles, and the length of that candle itself is already 100 pips if we're taking it as a whole mother candle right there. Okay, so there you go. This is good. This is quite a good one. Let's just look at the trend as well, just as a matter of curiosity, to see whether or not the selling or the downtrend has really held itself. We can see that it's within all the lines as well, which has got some risky element for the Euro USD. But if you're doing your pending order and all that, you should actually be okay, especially your location of where you have sold, because we don't want to be triggering our pending order and then it just bounces up. The trend just go total opposite direction, and then we are left with what do you call that, floating amount. Of course, floating and all that cannot be avoided. You do float, but how you manage your float and cut it early as well, and then redo your analysis and then re-enter the market. This is the most important thing. Okay, any questions, guys? You guys okay? All right. No questions so far. Everybody traded Euro USD, I guess. Sugu, how's your Euro USD doing? You're still in your more trades or not? What's going on with the Euro USD? Because of course we can trade we can trade in stages, but we want to know at which stage we want to trade. So for example, if you're looking at your 30 minutes chart, you can see that prices are going upwards. So prices are going upwards, it's just maybe a correction, because overall you have got a downtrend. So you don't need to worry, let it go up, and then you would basically look at your entry once it's on its way down. Okay, that's it. So we don't need to worry about whether or not, we always say to ourselves, oh, market's going up, the trend has changed. The trend has not changed yet. It's just giving us the opportunity to ride it again and again and again after it's corrected. So that's why the ABCD, as I have mentioned to you, is always to look at, if you are selling, you want to look at previous support. Has it gone through that support previously? If it has then risen your probability to actually enter the market for more selling momentum. Okay, all right, guys. Okay, let's see. Any questions at all, you guys? All good? Yeah, everything okay? Perfect. Okay, you guys have gone quiet on me again. Did you guys leave your screen and just leave me alone here in my room or not? Yeah, somebody needs to reply just to check. Sign of life online. All good? Okay. Thank God for that. Okay, I was just asking because I thought maybe I'm speaking to myself in the room. Okay, good, good, good. So you guys are there listening, I guess. So that's good. That's a good sign. Okay, so we have got Euro USD. We talked a little bit about Euro USD. Now let's look at GBP USD. Okay, we won't be it won't be a very long session here, but I just want to give you guys one or two what do you call that, trade ideas, you know, way to enter and all that, and then, you know, we can always wrap up earlier, but I want to also highlight certain pairs that we have talked about, and also you guys may be wondering what's going on with it. So here, for example, GBP USD, it has triggered again the centroid area, which is a good sign, and you see all these little candles here, and they get mirrored here as well, little candles going sideways. So we have got a little support line here that has been created by all these uh, little candles going sideways, and you see all mirrors. So it's giving us another area that it needs to break in order for us to get a better clarity of the trend direction. So it needs to go under 2411 and below. Okay, so if it goes at 2410 and then it goes lower, it's got higher possibility that it would go lower. But of course, you've got B point here for us to, once it goes through there, it might actually fall like a rock, even better. You know, you've got a better free falling once it goes past beyond the B point. Okay, there we are. So good. So you've got your GBP USD there. This is what's going on. The good news is that it has been challenged by loads of the EMA lines. So that actually means that it's got a lot of momentum to the downside. I just would like to see more, you know, the pin bar pattern of the candlestick, a little body with long, what do you call that, wick to the upside, like this one here, for example. There, you see, this one here. Okay, at the top, if it is at the top somewhere here, this is a good sign that it's, you know, it's got more room to the downside. But if I get something here as well, especially on the C point, if you've got loads of, if you have seen many times, successful pattern ABCD also depends on how the pin bar candle is right at the top of the C point, and that is usually a very good sign for it to actually come down even more. Okay, so here, for example, if I were to draw A here and B here, C, you see there's no like pin bar like this one here. If I found that there, then it wouldn't go like this sideways, go up and then now come down. You see, it would have gone down much faster and smoother as well. So that is why we've got all this pin bar to really understand what is going on. In terms of reversal, they are reversal type candlestick patterns. Okay, all right, let's go back. So that is your GBP USD. Okay, under the 2411, you want to know whether it can actually go down much more. You try and practice, go to your left and find that bearish, single bearish mother candle. Okay, all right. Okay, we've also had questions on AUD JPY. We talked about it yesterday. We drew these lines, yellow ones yesterday. They are the triangle pattern. So I did actually mention that it would most probably go sideways and then try to go to the very end here and then break out. Okay, break out up or break out down, we don't know that for sure. Okay, but we can always look into to the left again and look at, you know, which mother candle dominates much more in the past. Have you found maybe a very long candle up here upon the breakout, or more a breakout to the downside by a bearish mother candle? So we just need to watch what has gone on with AUD JPY in the past in connection to these two lines. Of course, you can see in these two lines, you've got lots of mother candle right there as well. Okay, but I want a mother candle coming downwards under this 73.50. So because I'm planning to sell, if I'm planning to sell the AUD JPY, then I'm planning to sell at 73.40, right? So I want the mother candle to give me some hints that definitely there's some selling power, but it needs to be there on the 73.50 area there, and then a long candle down. Can we actually find that? Do we actually have that? We don't know that yet, but yes, there's one here. Okay, that one there went just from the 73.80 area right down to the 73.50 area. But the thing about it is, if we were to sell, we can actually sell 73.70 and then take profit. Let's take profit 73.60. Okay, but that's only about 10 pips, so it's not really worth it for that. We've got some bearish pressure, but I've not seen a very long pressure, okay, to the downside. We want to always see bearish single mother candle because they mean a lot, okay? So it's very good. It gives you hints of whether or not it can happen, the selling that you intend, or whether that buy can happen because a bullish mother candle were there at the same spot in the past, okay? It's very important. So, don't see anything so far. Okay, and always go to the daily, zoom in a bit. Okay, loads of support, as you can see, at the 73.80 to 73.50. You can see all the touch points here, 2, 3, 4, some more. So it's a lot of support above the 73.80. So it's always better to buy at 73.90 anyway, or 74.00 is the next psychological number, so you can buy at 74.10 as well. This is for the buy if there is a buy sort of opportunity, and of course it's a very, very strong significant support level at the 73.80, which is also a psychological number. Okay, so only because from that area here, price did go up. Of course, it took some time, but then it went up to a very big level of it's about 3,378 pips up from that area. So definitely, we don't know what might or what will happen, but we may know what could or may happen here on a probability scale, because here you have got the potential of price rising. Hence the reason we don't want to buy at 73.80, where exactly that support was. Of course, 10 pips above 73.80 gives you 73.90 at least. Higher the better, because we do have lots of room. Now, maybe a sudden change of trend as well due to some geopolitics between Australia and China, for example. Their trading scenario is really important as well, because they are very big main trade partners, okay, between China and Australia. So here, as you can see, is just awaiting what to do. So very likely it could actually even be a breakout to the upside as well, because this is where we have seen a very, very big move at that area. But if it does actually go up 73.80, 90, me personally, I would wait until it goes to 74.00 so that I can then know they are definitely pushing the momentum to the buy side. Because if not, anything can happen and then it reverses down while you already clicked on your buy, and then it reverses upwards instead. Okay, so we want to be really, really careful with this scenario. Don't rush and go into a trade and think that you will not trade again if you miss that. No, it will never happen like that. You always will have trading opportunities. It's all about the location of where it is spotted as well. Okay. Yeah, you guys are very, very quiet. No questions so far? You guys okay? Okay. This one is probably best to leave it to rest first. until AUD JPY goes under 73.50. So your selling ideally could also happen at 73.40 if you're reselling it. 73.80 is your resistance area, but if it does go upwards, you want to look to the left as well. But overall, it looks like maybe, let's just take a look at this. It's got all these sideways going on, and we want to look at where it would break out and come back. Yeah, not just breakout. Only breakout is very risky. That's why a lot of traders, what they do is they wait for the breakout. But if you wait for the breakout and return, for it to return, and then you buy from there or sell from there where it came back and where it actually broke out, then you are more convinced of the trend. Because what would then happen is that if you're just riding along a breakout and then it goes too far, you might end up floating in that, because it could then take any level to actually return back, and that is, you know, quite risky. Okay, we have question at last. Good. Can we look at GBP AUD? Yes, we can. Let me just move that a little bit. GBP AUD. You got it. There we go. So GBP AUD, let's look at the 1 hour chart. Let's look at what's going on with this pair. Okay. What's going on with this pair? Let's see. I know I can actually arrange this. Give me a second. Hide the video panel. Okay. Right. So let's just go to the right. Now it's trading, GBP AUD is trading at 1.8054. Now, very, very close to the 50 psychological number. So your selling price would most probably be 1.8040 area, would be better to sell. It's all in this sideway at the moment, but let's compare it with the 4 hour chart and then the daily chart as well. Okay. So then here, it's quite clear on the 4 hour chart. It's got a momentum to the downside. It is definitely under over 3 lines already. And it's good. I think we have plotted a selling area yesterday. I think it was at 8040 pending order. Yeah, correct. And then 7960 there. So you've got about 78 pips or so. That's quite good. So we've got all this wick. You see, if you've got more and more wick to the upside, a lot of wicks up on top of the candle, that shows that it's not that easy for it to go up. It's got its lack of power. It's got exhaustion there. So it is heading more downwards as opposed to upwards. We've got a nice bearish mother candle there as well. Most recent one. We've got another one here. So that trading area, it's quite an interesting one. So we need to also know currently now, is there strength in the market? Are there a lot of participation to strengthen the market to the downside? In order for us to find the answer for that, you can actually go to insert indicators and look for the average directional movement index, this one here. Click OK. You need to add level 25 right there. The rest, just you don't need to touch that. So the reason why it is not moving so much, because the ADX is under the level 25. You are looking at only the blue line there, okay? So you don't change the setting, nothing, you just add the level 25 so that you can get this dotted line 25 here. If I go on to the 1 hour chart, I can see it's still under, okay? If I go on to the daily chart, I can see that it's above, very nicely upward. So that means that for the short to medium term, you may not be able to see a big drop and fast drop of the GBP AUD. But for the medium to long term, you may actually then find a lot more momentum. So this is just telling you, okay, you've got to wait a little bit. Don't get overexcited. Put all your trades now. You don't need to. Look for other pairs is probably better. And just relax, you know. You don't need to actually, what do you call that, force a trade if there is just no clarity of the trend. That's it. Okay, and the strength of the trend, of course, that's what the ADX is for, to measure the strength of the current trend. So if the blue line is above 25, that it's a downtrend, that means that downtrend is strong. If you see an uptrend, that uptrend is strong as long as the blue line is above 25, level 25 for the ADX, average directional movement index. Okay, all right guys, so let's see the timing. Okay, good. That is basically it for GBP AUD. So you are looking at, let me just repeat that for those who didn't get what I've said, in terms of the selling price, which could be at 1.8040. It is very close right now, so your pending order is possible for this 1.8040, and then you're taking profit at 1.7960. Let's see this fella here, 7967. Yeah, it's okay, not too bad. So yeah, 1.7960 TP, entering at 1.8040. So that's quite a good one for GBP AUD. It's just that it's not that it's too soon. It's just very, very close to the time of entry to grab the selling of the GBP AUD, or you can actually do a pending order as well. It's entirely up to yourself. Okay, good. So there you go. GBP AUD done. Alfred, you're okay with that? Okay, good. GBP CAD as well. I think we've triggered the price 1.6940 as your selling price, and then your take profit is at 1.6890. So 6840. Okay, and 6890. Okay, that's quite good. That's about 50 pips. So yeah, taking that 50 pips is also very good. Okay, good, Alfred. Thank you. And yeah, anybody else want to look at anything else before we wrap up? We've got about 3-4 trade ideas already anyway, so that's good. It's a continuation. It's just to know whether or not we are still in the selling, or have we shifted our focus and our strategy, which can actually happen. We can talk about a selling opportunity now, fail tomorrow, see how we adjust that, and then go back to a better positioning. So it's like a game. It's like you fall and then you just climb back up again, and then get extra tools, make sure that you are more geared up this time, and enter the game again. So we are entering the market again. So there you go. This one here, GBP NZD, looks very interesting. I'll tell you why it's very interesting for me. Mainly because of this. Okay, it's on the way down, and then it corrected, and then it's on the way down again, and it's on the way down after it has left the pin bar pattern right there, which basically says it cannot go up anymore. Okay, cannot go up for now, because it's got a pin bar there, you know, it's got exhaustion, it's got not enough power to go up. So with that, hence the reason you're seeing a lot of downward momentum. So that is for GBP NZD. So what do we do? First thing that we can actually do, of course, we can look to the right, look at the price 9313. Very simple. As it goes down, it'll meet 1.9300 as its closest psychological level on the downside. Okay, let's not talk about the upside yet, because it's just very clear with loads of bearish candle from here, and then it's got this beautiful pin bar as well, telling us that, you know, it's so difficult for it to go up. It's got exhaustion, it's got no power, it just want to fall. Okay, so it's good sign. Now 93, that's one of the things we look to the right. We need to also look to the left and look at this level of price, current price now. What is it about? What can we find from previous price action? Okay. Okay, let's look at the current price now. So we'll just scroll based on the 4-hour. Okay. Okay, we can see lots of support has actually, well, not really a lot of support exactly there, but it has actually pushed prices upwards above these two lines, purple lines. We've got support right there. Okay, but I'm looking at bearishness because the trend is most likely bearish. Okay, So bearish trading opportunity, and we have got one beautiful area right here. Okay, quite a significant bearish mother candle from the 1990 area. Let me just make sure, because our price is there. Okay, but that is further down than the current price. I'm looking at the mother candle close to the current price, or the current price needs to be on the current mother candle, sorry, on previous mother candle. Okay, so let's see. We've got some there, bullishness. I want bearishness. I need confirmation of a single bearish mother candle onto the current price. That's what I want. If the market's not giving you, you just don't trade. That's it. Okay, we've got something here. It is a start of the candle at the very top. The finishing of that candle is here at the closing price. And the number of pips between the current price now and the finishing of the candle is already about 84 pips. So you've got some good momentum of bearishness here. Okay, you've got some here as well. Once it goes down a little bit more, you've got that one there, you've got that one there. It's really good. So you've got GBP and ZD. Okay, let's see. Okay. GBP and ZD, very strong support there, but it has gone under that support, which is good news, because if it goes under this support, that means it manages to break through that support and coming down even lower, and that does then what would then happen is that movement, once it goes under the support, will bring in more and more of the sellers coming in. That's how we can then look at more momentum, liquidity, and then we've got lower risk as well for us of markets suddenly changing and all that, because it's got a very strong trend. GBP and ZD. Okay. This was actually a classic cup and handle pattern. Not sure how far it went there. 50 exactly. The handle went down, back up again, and then it started falling. Okay, good one. All right, guys, any questions at all before we end the today's webinar? There's not much questions coming from your end, but if you guys have got questions on the GBP JPY, again, it's the same thing. Hence the reason last week I mentioned to you guys about a very good marathon of GBP crosses, Euro as well, and AUD as well. So that's coming in. I just didn't manage to post some trade idea signals onto Trading Dot, but I think I will tonight, so that you guys can get added what do you call that, opportunities as well. But most of what we have talked about is what I intend to put it as the post in Trading Dot, so that you guys can actually see what's going on. Whatever we talked about, I trade for myself personally, but I also trade onto the Errante account to give you a better idea on how I trade and how to share it with you guys. Okay. All right, guys, any other questions at all? That's okay so far. Okay, just before we go, maybe we talk about something that I've drawn for some time already, CHF JPY, perhaps about 2 weeks ago. All these boxes were drawn about 2 weeks ago, and about a week and a half or so. And when the price actually start to just drop there, 113.00 and a little bit under, you can actually sell, take profit here. That's why I've got a buy. This buy here went up a bit, then I guess made you float a little bit there, or hit your SL. It's okay because we've got multiple trades actually. So I'm looking at this area for CHF JPY, and as soon as it goes Above 11320 a little bit, and then it enters this box, it's a buy opportunity, and the same goes for that. And there's a selling opportunity still here, and it's just going sideways at the moment for JPY. But then you have got quite far away from current price. But let's look at what happens, and it still remains intact for that I've drawn CHF-JPY. Okay, guys. Very quickly, we've also got oil right here. Okay, there you go. So with that, you can see, it is building momentum to the upside, but it does actually depend on geopolitics, a lot on geopolitics, a lot on what the Saudis are talking about, Russia as well as the US, because they are all basically masters in this sector. Okay, they influence the sector a lot. Okay, the other thing as well is I have got a gap here. Okay, got a gap there. Okay, so has it closed the gap? Yes, so that's fine. So once it does that, we just need to know what would that whole, how you call that, scenario be for the US oil. Because here, for example, let's say for our chart, it has found resistance. Yeah, and it's trading quite well the downside. I just want to sell much more once it goes under the $34.63 per barrel there, okay, because then I may have a free fall for it to come down even more. Okay, we got questions. That's good. Why there is a gap sometime in the pairs? Well, that's a very good question. The gap is actually the gap of the weekend. Okay, so it's exactly like you need to picture it like, for example, you order things, right? You order things from the super home center that has got furniture and things like that. Let's say, for example, right? But you happen to need something and you make your order in the weekend. So they cannot guarantee they don't deliver in the weekend. Let's say, for example, they deliver only in the weekday. So it's the same thing with last orders coming in on a Friday, especially when we've got all these orders parked in, like pending orders and everything. They get parked in the weekend, and because the market is not open Saturday, Sunday, it will then get processed at a different price, right? Because the gap is the gap of price. The price needs to catch up with what price has been open on the Monday. Okay, so if the price is 1, 2, 3, let's say $10 now, okay, and because of the market closed and the market opened with a fresh new price, okay, it opened at 12, so that 10 and that 12 is where the gap is, and it will be a gap up because it became $12 when the market opened. Okay, so it all depends on how many orders we have had as well driving the price. Also, it's got to do with a fundamental factor, whether it has driven the market up or down. If, for example, it closed on Friday at $50, okay, and then Saturday, Sunday, market close, but we have a very big announcement in the news on Sunday, and it is very negative. So it is at 50, then when the market opens, it cannot bring the price to 50. It has to go down because there's a lot of pull out of interest and fear factor for that product, for that price. So the 50 will not remain 50, may go to 40, 30 because of what went on in the weekend. Okay, so that gap could be a gap down or a gap up. Okay, that makes sense a little bit, Alfred? It's okay? Yeah, it's all got to do with what have happened in the weekend and whether there's price difference from the new price when the market opened. Okay, good. So that's it. It's a very simple thing, but usually what happens is that if there's a gap down or a gap up, usually the market needs to close that gap as well. You need to close from the top to bottom if it is a gap up, and then vice versa. Okay, we'll talk about that. Yeah, it does, but it depends on the spike of price as well. That's a good point. Not only weekend causes the price, anything that happens in the market, let's say your system glitch, there's a big system glitch in NASDAQ or somewhere, and or there is a big, how you call that, calamity, like a big bencana alam, they call it, right? A very big thing happened. You have to close the system a bit, you need to reset, for example, and bank holiday, for example, in one country and then not. All that can actually cause gaps as well. Whenever there are reasons to reset the big financial system, especially stocks and all that, because we don't have a center for currencies, but then currencies gets impacted by other instruments that can be reset. So like NASDAQ can actually, the system can calm down. NASDAQ has happened a lot of time because NASDAQ is the only system, the most high-tech system that is unmanned. There's just no human involved. It's totally algorithmic. So then NASDAQ has happened before a power cut, and then they had to reset the system, and then we see it reflected onto different currencies as well, gap down, gap up. But it does not actually impact directly your trading and make you lose money. You know, when you're already trading, suddenly it becomes a loss because of the gap. No, you can trade the gap. But you can always, you must always expect the unexpected, but it's very uncommon. I wouldn't say that it's an everyday thing to have the gap during the weekdays, but weekend gaps, very common. Okay. All right, guys. I think that's all I have for you guys. I wonder whether you guys have got any more questions. You guys are okay so far. I think this everyday webinars would actually be quite helpful for you guys. But you guys need to spread the words around, bring more friends in as well, and trade. You know, I think it's going to be more opportunities as well. Of course, not for the good reasons. We also will get a lot of sell-offs because of the COVID, because of many factors. But the good thing is that there are trading opportunities, of course, and we try to help as best as we can to give you guys trade ideas, especially, and good guidance in terms of consistency, so that you guys can really learn many new things every day and keep polishing and sharpening your knowledge and skills. Okay. Not quite confident. Good. That's fine. Noshini, you need to take it at your own pace. Okay. It's just like running your own business. It's just like you have learned something for yourself and you make that a personal gain, a personal knowledge or process. So don't rush. You know, you just, if you don't feel like trading, don't trade. Okay. If you feel like trading and you feel not very comfortable as well, but then you think you need to trade, take it easy. Don't need to trade every day. Sometimes, you know, the good thing is that I've experienced it many times with myself and also with the community and students, is that most times, this is the truth, you can actually trade less and earn much more than when you were trading a lot. Okay, so this is it. It's all about aiming at the right place to trade. The location of where you want to trade is more important than the number of trades that you need to put in. So you don't need to actually put in the trades every day to make money. No, because if you look at it, if you don't trade, let's say 3 days in a row, and then the 3 days in a row, it was just very risky and all that, and then you finally got a little bit ready with a certain way of trading, and then you find that you have tweaked some area, and then you just, you know, manage to hit your TP with a good run of profits on a strong trending market, then it will actually cover up a lot of things. Okay. All right, so it's fine. Don't worry about the need to trade is actually disguised as fear of losing out. Okay, fear of missing out. And the FOMO, it's called FOMO, F-O-M-O. It stands for fear of missing out. Okay, you think that you missed out on opportunity, but the reality is that you just feared that you have missed out because you may have not traded and may have not actually made money for the past days or weeks, and you just need to hit your target for the day and the goals, and then you fear that you have missed out the market. It's a very common thing, but don't worry about it. You know, we want to trade. If you relax much more and you think that if you want to trade and then you trade, is better at this the beginning stages. Why? Because you're still learning the skills. Once you've got the skills polished much more, then you will follow the process of picking out best trades following the trending market. Okay, so once you are skillful enough, in picking the right pair and knowing the trend, and then trading in stages, little pips first, then you build the consistency. Once you build the consistency, then your confidence comes. Okay, so your confidence does not actually come on its own in trading. It comes with a lot of build up of the three things. First, the focus on the process. You have to be very patient, okay, and discipline following the rules. So these three things first needs to be put in place and practice much more. Then the confidence will come. The confidence is an after effect. It's a byproduct of having these three things: focus, discipline, and patience first. Then the confidence comes, because you need the patience, discipline, and focus to make sure you are following the rules and the process of analyzing the market, because you cannot go and just trade, right? I mean, that's the difference between trader gambler and trader investor. Trader investor, they don't just trade. They don't just wake up, go onto their PC, onto the chart and click on the buy and sell. I don't do that as well nowadays. Before, yes, I've done it a lot, hence the reason I've lost a lot at the time. But nowadays, it's more like analyze the market. So analyzing the market has got nothing to do with clicking the buy and the sell. Clicking the buy and the sell is the last end picture, and it should not actually even be in your mind of clicking buy and sell until you are clear with the analysis of the market, until you know what pair you have picked, the trend that is strong for that pair that you have picked, the direction is really strong and solid. You look to the right, you look to the left, you've followed all this process. So that's why the patience and discipline needs to be there, cultivated, so that you are more focused onto the process, not onto the buy and the sell button. No, it is onto the process of analyzing first. We are not trading the market. We're not supposed to trade the market straight away the first 5 minutes, 10 minutes. We're supposed to analyze the market the first 5-10 minutes, pick out the right pair, understand that it is definitely a strong trending market, then you click on the buy sell. Okay, so the confidence will come. Don't worry about it. All right, all good so far? Yeah, perfect, good. You all will do well, don't worry. Okay, we've got more consistent webinars every day, so we want to deal with every doubts and every uncertainty, every lack of confidence in any area. We want to just deal with it on a live market. Okay, so a lot of other trainers out there, they're doing a lot of these kind of training on the weekend. In the weekend and on a demo account is just not real. It's not real enough. I don't do these things. So we've got other trainers out there. They will teach you in the weekend. They'll teach you theory of trading. Anything that is in the weekend, for me, is theory. It's not enough to actually pressure you. You need healthy pressure to understand that you are dealing with real money in the real account, in the real market, and anything can happen anytime. You need to you need to feel that, and you need to go over that with practice, because that is the only way to survive with consistent results in the Forex market, is to be to deal with it in reality first. Okay, the reality of this. If not, there's a lot of traders out there, they trade really well in a demo, they feel very comfortable in a demo, and finally they go on the real account, they start doing really badly. but it's not them. It's just that preparation was not done properly. Preparation has to be 70% practical reality and 30% only theory. Okay. All right, guys, I've got to go. So with that, I want to thank you guys, and we'll meet again tomorrow. Okay. So let's look into tomorrow's topic as well, and it will be the last day of the week, and let's do some intraday trade so that we can actually enjoy our weekend better. Okay. With that, thank you very much, everybody, and have a good night, and we'll see you tomorrow. Bye-bye.